Executive Suites, made possible in part by the generous support of the Rhode Island Foundation. Now, Executive Suites with WPRI.com reporter Ted Nesi.
Whether the topic is the Superman building, the 195 land, or 100 Westminster Street, big budget real estate is in the news a lot these days, and the headlines aren't always good. Providence now has the highest commercial tax rate of any major U.S. city, which local experts say is part of the reason so few cranes are in the sky. So what's the outlook for Rhode Island real estate in 2014? And what changes could get more projects going downtown and elsewhere? This week on Executive Suite, Senior Vice President and Partner at CB Richard Ellis, New England, Alden Anderson. Welcome to Executive Suite. I'm Ted Nesi. Alden, thanks for being here.
Thanks for having me, Ted.
And we have tons to talk about in the world of real estate here, but I want to start with, just to get people situated at what you do, CB Richard Ellis. You guys now actually go by CBRE, and you're in the New England division. Give people a sense what you do there. You're head of the Providence office. Are you buying real estate? Are you helping people already own it? What's your job?
So in our Providence office, we are simply a brokerage office in Providence. Our main hub in New England is in Boston, and we have, if you can imagine, every line of commercial real estate, from asset management, property management, appraisal services, consulting services, you name it, go down the line. We do all of that in the Northeast, global corporate services, but our Providence office is primarily doing just pure brokerage, where we are representing clients who are either buying or selling, leasing, and doing other advisory work for those clients in this marketplace. So that's our bread and butter.
Kind of like a matchmaker in a commercial real estate
Yeah,
world.
we do have a significant management presence. Our management people that are doing facility and property management at various different properties in this marketplace are on site at the buildings. They're not working in our particular office that's located in downtown.
Gotcha. So you guys obviously keep close eyes on the current state of commercial real estate in Rhode Island. That's your bread and butter. And I want to start things off actually by showing a chart I think we have ready up there. This comes out of there. It is your end of year 2013 look at sort of the state of the commercial real estate market. So just so people, we'll keep it on here for a minute on the screen so people can weigh in. What are we looking at here? What are the important metrics for people to check out here?
So if you look at the chart on the right, you've got arrows which way it went from year over year. That's a YOY is covering, and then what the current status is. And obviously, as you can see, vacancy rate is a key metric that people look at. How's the health of the market? Absorption. How much space has been leased in a 12-month period? That's a net number, so that doesn't mean how much space in total was leased. It means on a net basis how much was absorbed. You might have had 200,000 feet of leases done, but if you had 200,000 feet of vacancy and you absorbed 240, you had 40,000 square feet of net absorption in that particular year. An important statistic, because that's what owners of buildings or acquirers of buildings are looking at in the context of what does the future look like? How are we trending? When you have negative absorption, it means your vacancy rate is going to be going up. Usually when your vacancy rate goes up, your rental rates go down. They work inversely a little bit like interest rates are moving in terms of the price of bonds. So, and then lease rates you look at, and obviously I just touched on that. And the interesting thing in Providence and in Rhode Island in general, we do not have a highly cyclical lease rate market. You do not see big peaks and valleys. If you looked at a chart showing lease rates over a 20-year period in the greater Providence area and compared that to the greater Boston area, they would be dramatically different. The Boston would be highly cyclical. The Providence, you still see cycles, but they're much shallower.
So it's a more stability in this market, for better or worse.
It's a stability. The negative is you don't have the big upside. So you don't have the investor coming in and betting on, I'm going to get in at the bottom of that big spike in rental rates where I can really grow the income in this building, and therefore I can turn around in 3 to 5 years, sell it, and make a quick, big score on the building.
Let me ask you about that very top number on that chart. Rhode Island vacancy rate, 18%. That's on commercial real estate. And that was down year over year, but 18% vacancy will sound high to people. Put that in some perspective for us. Is that good? Is it bad? What does it mean?
Yeah, I think what you have to do, what I would tell you, I think the important point is the vacancy rate has come down. And when you look at the market across the board, particularly the trading market, meaning where the most activity is going on, it's a relatively healthy market. It hasn't dropped precipitously as you have seen in the Boston market, which is a core market with a lot of economic activity and a lot of deal trading going on. But on a historical basis, it's trending in the right direction. And if you look at it, a good example would be the Class A office market in downtown Providence.
For people who don't understand the classes, those are the top of the line kind of big office spaces, the prime ones.
Correct. I mean, in a very simplistic way, Class A would be, let's say, buildings with rents above $25 to $26 a foot. Class B would be 18 to 25, and Class C would be below 18. That's very simplistic. There are some variances to that. So the point being is that in the Class A market, the higher end of the market, the vacancy rate is sub 10% today, which is a very, very healthy market. Class B, it goes up a little bit, goes up into the mid-teens, and then you get into the Class C, it goes up considerably higher. But one of the points I'll make about the Class C are really those properties that are on the edge of functional obsolescence for office use, and there are a lot of the buildings that you have seen redeveloped for alternative uses. A great example, great success in downtown Providence as the recent Providence G project that was done, which is now all residential, has a retail component to it.
The gas company.
The old Providence Gas Company. It was office space, it was really getting to be functionally obsolete, very small floor plate, a little disconnected because it was built in phases. Great reuse of the building. So that gives you a little bit of a sense. Suburban market, it varies from market to market. I've looked at two ends of the spectrum. Aquidneck Island, it's felt some effects from the impact of the downsizing in the defense industry, a major component
Sequester,
of that.
all of that, yep.
Sequester was absolutely a big impact, and we represent a bunch of buildings down there and regularly getting calls from big defense contractors saying, we're squeezing a little bit, we got a few less employees. So you've got that end of the spectrum. You move over to the West Bay, which is the largest suburban office market, basically made up primarily of the Warwick, Cranston, East Greenwich area, and cycled around the airport, which you would expect would be a high
Jefferson
volume.
Boulevard down in that area.
And significantly lower, again, mid-teens vacancy rates, starting to see some rent growth in that area. So it's not, if you look at a statewide number, it can be a little bit misleading. You really have to look at the submarkets because, frankly, that's where tenants are looking as well.
Yeah.
Somebody who's going to go to Aquidneck Island is probably not looking in northern Rhode Island.
It's like a house in Central Falls and a house in Westerly. They're very different on pricing and a lot of other things, even though there's statewide numbers.
Absolutely.
Yeah. Before we have a break coming up, but before we do that, I want to ask, you talk to real estate investors outside Rhode Island a lot who are considering coming into Rhode Island, doing business here.
Yep.
What are those conversations like? What are the perceptions you hear? What are the conversations you have with those folks?
It depends how well they know Rhode Island. And of course, that's always a double-edged sword. Sometimes if you know too much, it makes you cautious. If you know too little, you have one level of interest, but the other side of it is, I don't know enough, I need to learn more. And when I talk to those people, generally your initial impression is, I hear a lot, high unemployment. The first thing that comes out of almost everybody's mouth, do I want to invest in the state that's got the highest unemployment in the country right now? The flip side of it is people look at the proximity to Boston. They also look at the fact that we've got world-class educational institutions, we've got world-class healthcare institutions, we've got our city is also our state capital. Those are three great legs to a stool. And that in itself does attract investors. To the Providence area, you certainly see investors looking outside of Providence, but the core interest is around the city. Investors in the last 5 years, since the real meltdown in the late 2000s, really focused on the core markets. They weren't into taking on a lot of risk.
Yeah.
As pricing has gotten very challenging in those core markets, they're starting to look into secondary markets, Providence being one of them. So we're starting to see more interest from investors. I mean, I can just tell you from the number of conversations I have with investors.
A hopeful sign there. We're going to talk more about what you're hearing and what's going on next, as well as big projects like the Superman building, but that'll be after the break, so stay tuned here on Executive Suite. Welcome back to Executive Suite. I'm Ted Nesi, and we're talking today with Senior Vice President and Partner at CBRE New England's Providence office, Alden Anderson. Alden, we're talking before the break about different types of space, and you mentioned that Class A, the most expensive rents in commercial real estate in this area, actually the vacancy rate is quite a bit lower for that, under 10%, you said perhaps. It must be hard at that level to get a lot of space. If you're a large enterprise thinking of opening a big office here, you need a significant amount of square footage. It might not be all available together.
Yeah, it's an interesting point because you see a significant bifurcation in the marketplace with regard to the size of space you're looking for. If you're a tenant looking for greater than 20,000 square feet of space, you might, again, whether it's Class A or Class B will obviously open up the spectrum of the number of options, but in the Providence area as an example, you might have a half a dozen options to consider. If you're a tenant looking for 3,000 to 7,000 square feet, which is your bread and butter trading market and leasing market, you may have a dozen options to look at. So as you can see, as the options open up, the negotiating power of the tenant with a prospective landlord is stronger when they have more options. So the size of the spaces, while we have a vacancy rates that might look like there's a lot of available space, as you move up the size spectrum, it has a significant impact on how meaningful that number is. I mean, if you're a Class A tenant looking for 50 to 75,000 square feet of space, your options are very limited and you're going to want to look well in advance. Not going to say you couldn't come up with anything, but time will be an important component to that process.
Now people hear that, they'll say, well then why aren't we seeing a lot of cranes in the air building Class A office space on spec? Well, what's going on with that? The fact that, and I know there's a bunch of things that move into that, but why don't you think we haven't seen a lot of new buildings, period, in Providence in recent decades?
No, you really haven't. I mean, if you look at the two recent buildings that were built were G-Tech Center and the new Blue Cross Blue Shield building, 500 Exchange Street. And both of those buildings were driven specifically by a user. Blue Cross owns their building. They built it for their own account. They did build some spec space and they've leased some space out to some outside tenants. But in terms of a percentage of the overall building, a very modest amount of the total building. Same thing at G-Tech Center. About 25% of that building was spec space. The balance of it was all for G-Tech themselves. Prior to that, the most recent building constructed was Citizens Plaza, which was built in 1989. So it's been quite a long time.
A quarter of a century, 25 years. Yeah.
Yep.
So what's going on with that? We've talked a lot about that in recent shows, but I want to hear your perspective.
Yeah, so if you look at it today, and we talked a little bit about rents a few minutes ago, and I think it's important to reflect on that. As I said, the high end of the market today is $32 to $34 a foot. That's where deals are being cut at the top end of the market. If you built a brand new Class A office building today, you'd have to get rent somewhere between $45 and $50 a foot.
Wow.
Same type of structure in terms of comparing
that is a huge gap between whether the Class A rents are and what you think would be necessary to make that building viable.
Correct. The other component that's an important consideration is to be able to finance a building like that, you're probably looking at the fact that you're going to have conservatively 65 to 70% of that building pre-leased with credit bankable tenants in terms of whether it's one tenant or multiple tenants making up 60 to 65% of the building that's being constructed. So if you do the math, you think you're probably not going to build under a 200,000 foot building. So that means you're building you have to have a pre-commitment of about 130 to 140,000 square feet of bankable credit tenants pre-signed up to get the lender to finance the construction of the building. Construction of the building is probably a 2-year cycle. So if you start trying to line all of these things up, it's a very difficult equation to solve. Obviously, you're going to have tenants who are willing to pay considerably more than what the high end of the market is commanding today. And if you look at every new building that was built in the last 30 years in Providence, starting from what's called 1984, because that's actually a pretty good inflection point, when 100 Westminster Street was built in 1984, 121 South Main Street was built in 1984, is all of those buildings are really driven by a lead tenant. 100 was Fleet. It was actually, might have been Industrial National at those times. I can't remember when they changed their name.
There.
Exactly. Old Stone Square was 121 South Main Street. Obviously, we just talked about Citizens Plaza was driven by Citizens Bank, G-Tech by G-Tech, Blue Cross by Blue Cross. So you can see the story there. If you start looking at the landscape of who might be an anchor tenant for a new building, it's a limited scope out there right now.
Absolutely, yeah.
And you can see the pricing dynamics.
Why, though, it seems like a market failure in a way to have $30 something rents, but the cost to actually get a building up being upwards of $50. I mean, it's a massive gap between what you can get. What's driving that? Why is it so much more expensive to put things in? And you've spoken to some of it, but versus what the market will actually bear here. Shouldn't things eventually rationalize to what the market will bear?
Well, I mean, the market is bearing what the rents are today, and that's what's driving the pricing. And until you have, I mean, this happens whether it's in Providence or Boston, you're going to see the same thing. And that's why you'll see when rents drop in a core market like Boston or Washington, New York, Chicago, below the level where new construction is sustainable, it just stops. Nobody's building anything. And then as you start to see rents inch back up to the level where you can justify new construction, the price, basically the financial model works, then you start to see landlords or builders
So we need that
developing
Class
spec.
A to keep inching up before.
The rents simply have to move, or you have to have that one big driver that's going to get a building out of the ground enough to stabilize and then fill it up. You know, a good example, at G-Tech Center, they completed that building. They had 2 floors of spec space on the top of the floor. It took a couple of years to lease up that space, but it's substantially leased today. The building's well over 90% leased, doing extremely well. Great adding it to the skyline of Providence, just like the Blue Cross building being added.
All right, we're going to take another break. When we come back, we're going to talk more with Alden Anderson. We're going to go dive in on the Superman building and some other of the big issues affecting real estate in Providence. Stick with us on Executive Suite. Welcome back to Executive Suite. I'm Ted Nisi. My guest this week, CBRE New England's Alden Anderson. Alden, I keep telling the viewers we're going to talk about the Superman building. Let's talk about the Superman building. Sure. First, we should say you're not directly involved in that deal. CBRE isn't representing anybody there, so I'm asking you purely as an analyst and an observer of this market. But you know, I know there's a lot of discussion among regular citizens, policymakers about, you know, how do you even tell if a deal is reasonable there? What would you be looking at as you look at the numbers inside of a deal, whether there's public money involved or not on the Superman building, and whether it's a fair terms that people are getting?
Sure. So let me first say that related to that project, I think it's an important discussion point, and I'm glad that people are talking about it because it is in the middle of our capital city and it's a highly visible, iconic building. So I think it's important for the discussion to go on. And you know, we look at something like that, and for us, it's just looking at it and saying, are the economics of the deal supportive so that you can have a successful venture going forward? And are all of the pieces that are going into the equation at a market value?
Okay.
So I think that's the important consideration, and I know that the developer has been very open in terms of what he's trying to accomplish, how he's going about it.
So the starting point in some ways is, what is the fair market value of the actual building today, and how does that get allocated in the deal?
Yeah. Yeah, you would start with that and then stack off of that, and then you've got obviously all the different components of the construction and the financing, and it's a complicated, these are not easy things to get done. There's a good example that we can talk about over in Hartford, Connecticut, that they're just in the process of
a former Bank of America building, actually.
Net lease, 26-story Bank of America headquarters that Bank of America vacated, and a developer out of Connecticut, Southern Connecticut, just pulled together a deal with a lot of different parties involved, bringing pieces of the puzzle together, and it looks like they're going to get it off the ground and redevelop the building, and I think it's going to be 286 apartment units.
It's very similar to ours.
Yeah, because I think the latest plan on the Superman building was around 290 something units, roughly.
But there was, the governments in Connecticut have had to play a role in that, getting that off the ground, as I understand it.
They have, from what I've read. I'm not involved in it, but I did read some press releases on it, and interestingly, I talked to our multifamily group that works over in the Hartford market, and the rents that they're going to achieve in that building are very similar to the rents that achieving for comparable product in this market. So it's a very similar story, and took a lot of people kind of getting together and figuring out and realizing they needed to get something done there, and they got it done.
Talking about apartments, again, I know that's a little off your wheelhouse, but you guys pay attention to that too. People at home might not realize that the downtown apartments in Providence, we're talking more than 90% occupied in a lot of cases in the best of those buildings. So do you think there would be demand if the financing came together to build apartments there? Does it look like there's more sustainable demand for apartments downtown Providence?
It would certainly appear to be the case if you look at just the basic fundamentals, and really, you know, you can assimilate it to a healthy office market. If you had an office market where it was well into the 90% occupancy level, meaning you're in the single digits from a vacancy standpoint, you would be seeing significant upward pressure on rents, which means as you get upward pressure on rents, you start to see a movement in rents up to the point where you can justify new construction. That's obviously one of the challenges that drives whether it's office construction or residential construction is, can you generate enough income off of that asset that you're either going to redevelop or you're going to build ground up to create a return for the investors. It's all risk-adjusted returns. That's what they're looking at.
One funny thing some viewers might get a kick out of, you're actually one of the sources for the Beige Book. And for people who aren't familiar with that, the Beige Book is the Federal Reserve's periodic look at the economic situation in different regions of the country. They talk to folks all over to see how things are going, get some anecdotes, helps them set interest rates. How did that come about? How does that work? Does Janet Yellen call you personally and say, Alden, is how's Providence looking right now? Or
No, Janet Yellen has much more important things to do than talk to me. I have a research person at the Federal Reserve who contacts me on a 60-day cycle basis, same person I've been doing it with for a number of years. It's really a very interesting exercise because it really makes you step back and look at things on a more macro basis and think about what's going on and what's impacting the more on-the-ground micro level things you're doing every day. And they actually feed a lot of information back at you and ask you questions to get you to reflect on that more macro level. So for me, I find it interesting because it's a very thought-provoking process, and I think a really valuable exercise for getting thoughts from people who are really on the ground every day versus somebody from 100 miles away trying to observe what's going on in a particular marketplace.
So not much time left. What's the outlook for 2014? What if they called you up today? How are you feeling about the rest of the year in the commercial real estate world around here?
I think it's going to be a decent year. I think we'll continue to see some investor interest. I think the upcoming election cycle will cause things to stay somewhat level. I don't see major up. I don't see major down. I think it's a bit more of a wait and see because there are going to be so many changes in the landscape. If you just look in Rhode Island, you're going to have a new governor, you're going to have a new mayor in your capital city. Those are two
recently have a new House Speaker.
Big change. You have a recent new House Speaker coming in. So I think that's going to keep things from going up. And I don't see a lot of downside right now. We feel good about where we will rise with the national economy. Everyone will struggle with, do we rise fast enough?
Some stability there. All right, well, it's been an education. That's all the time we have. Thank you for being here, Alden Anderson. Be sure to tune into Executive Suite next week when we'll be talking all about food with an official from Rhode Island's Department of Agriculture on the new farm census, as well as a preview of the Eat, Drink, RI Festival. If you missed any of this episode or any other episode of Executive Suite, you can catch those on our website, WPRI.com. We'll see you next week.